Back home now, the Federal Executive Council approved a 2.3 trillion naira Transit Nigeria Economic Sustainability Plan on June the 24th, 2020. That's in a frantic effort to respond to the challenges posed by the COVID-19 pandemic, create a financial stimulus package for the Nigerian economy, and create jobs for Nigerians, among many other benefits. Now, the NESP, which is developed as a 12-month plan between the Economic Recovery and Growth Plan and the successor plan to the ERGP, is already 6 months gone. But how much of an impact has the plan made in rebooting the Nigerian economy as we head to another fiscal year with multiple headwinds to tackle? Now, that's the basis of my first conversation this morning with the Managing Director, Carry Asset Management Limited, Mr. Johnson Chukwu, who will also be talking about what to expect regarding the economy in the new year. Good morning, Mr. Chukwu. Thank you for joining us on the program. Now, the 2.3 trillion naira Nigeria Economic Sustainability Plan by the federal government is in its 6th month. How would you rate its performance so far?
Thank you, Bitsy, for having me. Merry Christmas and Happy New Year. What I would say is that if you look at that economic sustainability plan, the larger part of it was actually driven by the monetary authorities. About 1.1 trillion of that is coming from the monetary authorities. You know, there's a 1 trillion naira for the industrial sector. There's 100 billion naira for the health and medical services. There's a 50 billion naira for small and medium scale enterprises. So, but the key thing is that the component that is supposed to come from the fiscal authorities are still very, very weak. The most critical element of it is this, what they call the survival fund, which I know the government has started. It's actually meant to support companies that are in difficult situations that can't pay salaries of their workers. And from that economic sustainability fund, the government is supposed to help those companies to pay those salaries. But I'm not sure so many companies have benefited from that. The most component of that economic sustainability plan is a component that's coming from the monetary authorities.
Now, but when you look at the NESP now, which of course is serving as a bridge between the ERGP and the new plan, which is currently in development, is enough to rebase an economy suffering from stagflation?
Well, you know the key thing about winning the country out of economic recession, or what we call starvation, is it will require a lot. Beyond what the fiscal authorities and monetary authorities are doing, there's a large component will come from the private sector. There's also an element of it that are exogenous to us. That is coming from the external sector. When you made your introductory statement, you talked about oil prices and the agreement to likely increase the crude production. Last year, I mean, this outgoing year, most of the period Nigeria was producing legitimately 1.4 million barrels per day, which was quite far below our budgetary that benchmark, or what we require to have a strong economy. So you have the exogenous factor which came about as a result of COVID-19. Hopefully, as the government is trying to address the issue of using the budget to reflate the economy, using expansionary monetary policies to inject liquidity into the system, there's also that critical element, which is the global economy must rebound. There must be demand for crude. Oil price must remain stable. Nigeria must earn enough foreign exchange to be able to lubricate the economy.
But in terms of stimulation now, would you actually say that this plan has achieved some level of desired results when you look at the fact that the GDP numbers were in negative territory?
Well, it's too early to call. As you know, the GDP contracted. We actually entered into recession in the third quarter of this year. The contraction was 6.1% in the second quarter, and then we had a 3.6% contraction in the third quarter. We're hoping that by the end of the fourth quarter, the contraction will be slower, and hopefully by the second quarter of next year, we should come out of recession. But the key thing, like I said earlier, the fiscal component of the intervention engagement of the government has been very weak. We've seen monetary authorities going into overdrive, but monetary authorities know enough to bring a country out of recession. So what I would say is that we are still waiting for the full outcome of the government policies that are designed to bring the country out of economic recession. Unfortunately, which we must all have to accept, the government prior to the COVID-19 induced economic crisis, our economy was already in a very precarious state. The economy was growing at a very slow rate, which we all say that any little thing could tip it into the negative, and that's what we saw. So we need to have a more robust economic growth, and hopefully by the time we come out of this economic recession, right policies will be put in place, which I'm happy that the government is beginning to put in place.
Well, yes, we all hope for a quick economic recovery, especially as we go into the new year. But let's not forget the second wave of the COVID-19 pandemic is already here upon us. So how are we supposed to go through this again with imminent lockdowns and shutdowns expected?
Well, BC, granted, in fact, if you look at even the numbers, the number of those infected under this second wave is far above those who are infected in the first wave. I wouldn't know whether it was because we have better testing facilities, more prevalent testing arrangements, or we actually are having more infection than we had the previous wave. But what we also have to recognize that the world has found vaccines. We have the Pfizer vaccine, we have the Moderna vaccine, the other vaccines that are going through final testing phases. Countries are already buying up the vaccines. I think the federal government has budgeted about 40 billion naira for vaccination of Nigerians. Hopefully, we'll start with the most vulnerable. I want to believe that by the time we get to the second half of this year, the level of vaccination would have gone so high that people will begin to resume their normal economic activities. So I think the impact of COVID-19 will be more severe in 2020. By 2021, the world is going to have a hang on it. I don't think the global economy is going to go into a lockdown. If it will, given the rate of infection, we would have had a total lockdown. The world has accepted that we have to balance between livelihood and life, and that both of them are critical to survival. If you shut down the country like Nigeria, you are going to see possibly more fatalities as a result of hunger than you will have from the infection.
Yes, we are all, optimistic. Yes, there are vaccines and all of that. But then health is also very important. So what if, just what if, we have to get to that situation again where there is another lockdown? How do you expect us to come out of this? What do you think should be done? What lessons do you think we've learned from what happened in 2020?
Well, if, for instance, let's play the devil's advocate that we have to go into lockdown, the first thing the government has to do is to make sure we provide food. We need to provide food to the most vulnerable citizens. If you recall, it led to an upsurge in crime. People got to a point where they had to disobey the lockdown and enter the street to survive. So if for any reason we have to play the devil's advocate, like I said earlier, and we have to think of a possible lockdown, the first priority is that the government must develop a mechanism to reach out to the most vulnerable in terms of food provision. There were palliatives provided by COVID, which interestingly my company, Cowrie Asset, is member of. And unfortunately, that was not distributed on time to the extent that people had to go into those warehouses, to break into those houses to access those food. We shouldn't allow that to repeat itself. We must do like what other countries are doing, where they use technology to provide support to the citizens.
And that brings me to my next question now. The Vice President, who chairs the Economic Sustainability Committee, in a statement yesterday said that the COVID-19 stimulus package has so far reached about 1 million people, just like you mentioned, and there are plans to expand the scope. But do you think that such initiative should not be a one-off from government?
Well, interventions at periods of crisis is not an ongoing thing, but if you're talking of social safety nets, which I think your question is alluding to, that we must provide some support to the most vulnerable in the society. Many of us have advocated that. That has been the hallmark of Western countries where they have social capitalism or socialist economies, where the most vulnerable are taken care of, and then those who have the capacity are taxed to support the most vulnerable, still allowing for free enterprise. If you look at the population of Nigeria that are really in abject poverty, they are living under the poverty line. The World Poverty Clock said about 98 million Nigerians are living below the poverty line. So if you're talking about 1 million people who the government has been able to access to support, that's a drop in the ocean. So the key thing for me is that, one, we must have an economy that is a bit more robust, that has the capacity to provide employment, which is a core of supporting the citizens. The most critical challenge we have today is that the larger population of the young, able-bodied people cannot get jobs and therefore cannot fend it for themselves, and they now fall into that poverty dragnet and now need support. We need to expand the economy. We need to create economic policies that will allow private enterprises to be successful and employ more people, and therefore will reduce the number of people the government we need to support.
But if you were to do an assessment now, would you say that since the pandemic, the federal government has developed a good number of pragmatic economic policies to actually lift the economy out of recession?
Well, they are, some of them. And I think some of them were forced on the government by the exigencies of the current economic situation. And let me mention a few of them. The government has pulled back from subsidizing refined petroleum products, which many of us have cried ourselves hawks, saying that the government has no business subsidizing consumption, that if we have to subsidize anything, let's subsidize production. Today, the government is pulling back from that. The government is pushing, and a lot of multiple benefits that will come from the government pulling out of subsidizing petroleum products. You're going to have the refineries, you're going to have the petrochemical industries. They will produce resins, produce other byproducts for other industries, pharmaceutical industries, plastic industries to come up. So that's one thing. The other thing the government is doing, the government is considering bringing the private sector to invest in infrastructure. I cried myself out saying that the government does not have the economic resources to build infrastructure quickly so as to catapult this country into a developed society. So some of those things we are compelled on the government by the severe revenue debt, and the government had to start thinking beyond the idea of funding virtually every aspect of our life, social life from the budget allocations.
Now, let's talk about one of the recent government policies, talking about the cutting of non-essential spending, which, of course, has been a major talking point over the years. But it seems that that doesn't affect the budget so far. So with current still consuming more than capital expenditure, is this a case of yet another policy somersault?
No, this is not a case of policy somersault. It will take some time for you to reverse the obtuse nature of our budgetary system, where recurrent expenditure trumps over capital expenditure. If you look at the current 2021 budget that has been passed by the National Assembly, recurrent expenditure about over 5 trillion naira, while capital expenditure just about 4 trillion naira. But just that does not even show the full picture. The full picture is that it's only when the government is able to meet its revenue projection that we have the way with that to spend on capital budgets. Because remember that capital budget is discretionary in nature. But the recurrent expenditure is not discretionary. The government must pay salaries, must pay the overhead of the government, the president must move around. And these are elements that, for us to bring them down, the president has actually approved that the government should implement the civil volunteer report, which of all has not been implemented. We need to go to that level of drastic restructuring to reduce the recurrent expenditure. Otherwise, you're not going to see that reverse in a single year or two. What will happen is that either we go into a restructure of the fiscal framework and reduce the number of ministry agencies and departments, or we will grow the revenue to such an extent where it will get to a point where the government has the headroom to increase capital expenditure be above recurrent expenditure.
Now, when we talk about infrastructure deficit, it remains at its peak when you compare to growth. But how much growth do you think we've achieved so far this year?
In terms of infrastructure, well, there are a few things that, for instance, the Lagos-Ibadan Express Road has started operation. And for me, that's one of the most critical infrastructure development we've had in the recent history, beyond the Abuja-Kaduna rail line. Because one of the things you need to do is some of the most strongest infrastructure deficits we have here are power infrastructure, which is electricity supply, and then transport infrastructure, which we talk about the rail system, the road transport system, and the water transport systems. We need to address those two critical infrastructure deficits. And if we have done the Lagos-Ibadan Express Road, one down, many more to go. So we will say we're making some nice achievements, though at a slow rate. Many of us are hungry for faster infrastructure development, but somehow we are making the right steps.
And talking about steps now, when you look at the major part of the loan from the World Bank, now it will be channeled to infrastructure development, but how much stimulation in terms of jobs and income can that provide in the near term?
Well, the good thing about infrastructure development, it has multifarious and multifaceted benefits to an economy. If we take, for instance, if the $1.5 billion coming from the World Bank goes into infrastructure, you are going to see, for instance, it goes into road infrastructure. They will buy chippings, they will buy cement. The cement company will employ more people to produce more cement. Those who are producing chippings will employ more people to produce more chippings. You're going to buy iron rods. Many of those things are being produced locally. You're going to employ laborers, blue-collar job workers who will be engaged on daily pay. And these people will earn income. They will go back to the market, buy goods from the woman who is selling tomato and the woman who is selling cassava, who will now go back and be motivated to produce more. So once you build infrastructure, like what the U.S. did, they came out of the U.S. Depression of 1929 to 1933 from infrastructural spend, where the government built bridges, schools, and used that point to engage a lot of workers who got employed, who got income and went back to consumption. And then once you stimulate consumption, the engine of economic activities begin to rev.
Now, let's do a bit of forward-looking now. Of course, I know that we touched a bit on this earlier on, but what sort of recovery do you see for the economy going into 2021?
My projection that the economy will recover in second quarter of 2021. It will still be a slow growth. We've dealt with slow growth since the economy went into recession in 2016, when the economy contracted by 1.58%. Subsequently, in 2017, it grew by just 0.82%. 2018, it grew by 1.9%. 2019, we grew by about 2.2%. So I think we will still have to deal with slow economic growth in the next couple of years. We need to drive private sector investment. We need to drive foreign direct investment in the economy. We need to open several segments of the economy that are potential, that both potentials of strong growth, for us to see the double-digit growth we saw in the 90s. That's what we need to grow. At a slow economic growth rate, we're still going to be dealing with increasing level of poverty because the population is growing about 3%. The economy must grow at above 3% to create jobs and to take people out of poverty.
What about the commencement of the AfCFTA on January the 1st?
Basically, for me, unfortunately, we are not prepared for the African Continental Free Trade Agreement. When I learned that the headquarters of African Continental Free Trade Agreement is going to be settled in Ghana, I almost wept. The reason is that Ghana population is just barely slightly above Lagos population. Ghanaian economy is just slightly above Lagos. I'm not even sure it's bigger than Lagos and Ogun State economies combined. But African Continental Free Trade Agreement is going to set up there. Ghana has turned, Kotoko Airport has turned to an African aviation hub or West African aviation hub instead of Lagos. So we have not built infrastructure to support investment into Nigeria. A lot more companies are going to Ghana to set up operational activities. People will come as close as Benin Republic or Togo to set up operational activities, targeting the Nigerian market, because Nigerian market is still the largest market in West Africa. But we do not have infrastructure support. We do not have the appropriate policies. Only recently we have opened our borders. That would be a red flag for any foreign portfolio investor, any foreign investor wants to set up in Nigeria, because if you can close your border for more than a year, then that sends an alarm bell to anybody who wants to set up in Nigeria to service other African countries. So I don't think we are fully prepared. I hope that we will be jarred into wakefulness by the fact that we are seeing companies go to neighboring countries as small as the smallest state in the country to set up operational activities, because their target is Nigeria, and we don't have the infrastructure, nor do we have the policy environment to support Nigeria as a productive base for companies to set up in this country and sell to other African countries.
All right, but in spite of all of this, we just keep staying positive. I'd like to appreciate you, Managing Director, Carry Asset Management Limited, Mr. Johnson Chukwu. Thank you for speaking with us, and do have yourself a wonderful holiday.
Thank you.
We'll be talking commodities when we return in just a moment. Do join us again.